The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
It's Monday morning. A very warm welcome even to Squawk. Who knows what's going to happen in the crazy world of tariffs, the art of the deal in the markets this week. But you've got Karen Cho. Good morning, Karen. And myself, Steve Sedgwick. And these are your headlines. The Trump administration exempts, we're using the word exempts now, smartphones, chips and other tech components from tariffs, but US officials warn the move is only temporary.
This is not like a permanent sort of exemption. He's just clarifying that these are not available to be negotiated away by countries. These are things that are national security that we need to be made in America.
Thank you, Mr. Lutnick. All is clear now. A relief rally for equities despite confusion at the White House, with tech-heavy Hang Seng leading the gains in Asia.
Chinese exports surged more than 12% in March, blowing past expectations as President Xi Jinping says protectionism has no way out. Policy uncertainty upends Wall Street's expectations, with billionaire hedge fund manager Ray Dalio telling NBC he's worried about something much worse than a recession.
If you take tariffs, if you take debt, if you take the rising power challenging the existing power, if you take those factors and look at the factors, those changes in the orders, the systems, are very, very disruptive.
Karen?
Good morning, welcome back.
Yeah, it's great. I had a lovely couple of days off. I'm afraid the conversation in all the polite circles in East Sussex, and the ones I take part in well, it's all about Trump. You cannot get away from it. If you tell people you're in the news business, they just want to know your opinion, and my opinion is worth the same as everyone else's. I haven't got a clue.
It's all about those off-ramps, isn't it? And we thought we had another one over the weekend when it came to technology. And then there was another messaging in that detail that, look, there's going to be more pain potentially for the sector. So thoroughly confused as to why futures then went up. I mean, It was just extraordinary because we don't have any clarity still.
Yeah, and on one level, it's so bonkers, you kind of almost have to laugh. But I'm not laughing because everybody out there who is making investment decisions, their personal ones, or for their companies, or for their countries, forget it. You cannot make medium to longer term decisions at the moment. Everyone is trying to find a shred of confidence in those investment decisions. You can't do it at the moment as well. So the something show that is going on in Washington at the moment is destroying confidence. And you can't have the tariff one day and the exemption or the exception or whatever tautology we're using the next day and expect people to make medium to longer term investment decisions. And someone at the administration has got to realize this. Meanwhile, the administration has now issued, we understand it's an exemption for smartphones, computers and semiconductors from reciprocal tariffs, but the president has now indicated the reprieve is only temporary. Writing on his social media over the weekend, Trump said his administration will be taking a look at the entire electronic supply chain in the upcoming weeks. Thank you, sir. The White House said the exemptions were made to allow tech companies more time to move their production to the US. It comes after Trump imposed a 145% tariff on imports from China, a move that would significantly impact US tech giants such as Apple. Mr. Trump said he will provide more details on future semiconductor tariffs later today. It comes after US officials sought to downplay the exemptions over the weekend. US Trade Representative Jameson Greer told CBS that the products will be dealt with, quote, under a different regime. Meanwhile, in an interview with the CNN network, the White House economic advisor Kevin Hassett, for his part, said semiconductors were a key part of defense equipment, adding import duties on these products will be carefully considered. Well, the trade advisor at the White House, you know, the one who Mr. Musk said something about a load of bricks. Yeah, well, that's Peter Navarro. And US Commerce Secretary Howard Lutnick, they both also defended the moves, explaining there was more to come in the weeks ahead.
These are included in the semiconductor tariffs that are coming, and the pharmaceuticals are coming. Those two areas are coming in the next month or two. So this is not like a permanent sort of exemption. He's just clarifying that these are not available to be negotiated away by countries. These are things that are national security that we need to be made in America.
This is unfolding exactly like we thought it would in a dominant scenario. What's going on here is we start with the observation. I don't think you would disagree with me at all. The world cheats us. They've been cheating us for decades. They cheat us with tariffs, higher tariffs, but more importantly, they cheat us with the so-called non-tariff barriers. It's the VAT taxes, the dumping, the currency manipulation, the technical barriers that keep our autos out of Japan, the agricultural barriers that keep our pork out of Australia or Europe. They're doing that to the tune of $1.2 trillion of wealth.
Hello, good morning.
Good morning.
How are you?
Very well, thank you.
There is an internet meme doing the rounds on social media, and it's almost like the Chinese
Which
are trolling. Well, which one? There's several actually, but of very overweight people very slowly assembling iPhones. Have you seen this one?
I haven't.
You haven't? You should look at it. Basically, this is, I don't know if it came from China or whatever, but it's basically saying this is how it's going to look when you assemble your iPhones. And I know it's tongue-in-cheek, we're all looking for humour in these dark times as well. But seriously, have you actually found out yet, because we're all trying to find out how much an iPhone would cost if it was assembled. I've seen $3,500 to $30,000 to cost to assemble it. So goodness how much it would cost to buy the thing.
Absolutely. I mean, it's going to be extraordinary. I think it's extraordinary that the administration thinks that Apple, sort of giving them a 1-2 month exemption, all of a sudden they're going to switch their manufacturing to the US.
We'll bring all the equipment back to I don't know, Detroit or somewhere.
This is a supply chain that's been built up over several years, and it's so intricately linked that you can't just unassemble it and reassemble it back in the US. Remember, about 90% of iPhones come from Foxconn's manufacturing plant over in China, and that's a supply chain that has been built out. But the expertise of the workers, the knowledge of the workers there in China is what's been key to that. So trying to replicate that in the US is going to be very difficult without almost importing all of those workers as well. I think there's one of the estimates about 1 million workers in the Foxconn factory over in China, and so this is going to be incredibly difficult to reshore something like Apple's supply chain into the US, particularly as it relates to all the different suppliers, whether it's semiconductors, the display technology, and everything else in between as well.
It certainly caught on, didn't it, on social media, how much is your iPhone going to cost you? And I think possibly that's why we had this response from Trump. But if you look at Apple's stock, certainly has been battered on the concerns. But interestingly enough, the semiconductor sector for me, because this is the next port of call, really, as we talk about what exemptions, what sort of tariff hit is going to be coming from the sector. There was the CHIPS Act that's caught the sector in its net in recent years, but it did bounce last week. Semiconductors were up 11%. So what's coming this week? Just how fierce could the administration get? But keep in mind, there's obviously DeepSeek going on for the Chinese.
Yeah, I mean, I think with semiconductors, it's interesting. You think about the semiconductors that a lot of the US tech giants rely on, right? It's the NVIDIA GPUs, and for companies like Apple, it's the chips that are inside the iPhones and other products as well. A lot of that's coming from Taiwan at this point, from TSMC. They're the ones who are doing the leading edge manufacturing. Now, under Biden and now under Trump, there is this continued push to reshore manufacturing to the US, and we've seen big commitments from TSMC, from Samsung, in billions of dollars of committed investment into building US manufacturing in semiconductors. That's no doubt going to continue, and I think that's an area where potentially you can see some of that reshoring effort happen in semiconductors, and it has been taking place.
Can I ask a very quick question? Wasn't all this happening under IRA anyway, that there was manufacturing going back to the States?
Yeah, but semiconductors is certainly an area where I said you are seeing that happening, and that there is a realistic possibility that some capacity in semiconductors, in advanced semiconductors, can be made in the US. But if we're talking about making entire products, particularly like the iPhone in the US, that becomes a real challenge.
Hard to see that this is going to be real jobs. I mean, we've been at tech events and you've seen that robotic arm screwing in little pieces. If it does come back in the US, it's going to be automated.
It's going to be heavily automated, and it will need to be.
Arjun, thank you so much. Let's push on. Ray Dalio is warning that trade tariffs and a depreciating dollar is putting the US on course for something potentially far more serious than an economic downturn. Speaking on NBC's Meet the Press, the founder of Bridgewater Associates said America's focus should be on how it responds to a new world order.
And I'm worried about something worse than a recession if this isn't handled well. A recession is 2 negative quarters of GDP, and whether it goes slightly there, we always have those things. We have something that's much more profound. We have a breaking down of the monetary order. We are going to change the monetary order because we cannot spend the amounts of money, so we have that problem. And when we talk about the dollar and we talk about tariffs, we have that. We are having profound changes in our domestic order, how ruling is existing, and we're having profound changes in the world order. Such times are very much like the 1930s.
Let's take a look at those markets. They did close firmer for the Friday session, so some green back on the boards and going into the weekend where it could have again been risk off. But markets repricing. JP Morgan to the upside. Don't forget earnings in focus from some of the banks. That said, banks over the course of the trading week were still very cautious, trading down by about 0.6% versus FANG Plus stocks. This was a technology bounce that we saw mainly, and you can see the Nasdaq out in front and eclipsing those gains on the Dow with a rally of just over 2%. Apple, a big moving constituent too for the boards on that Friday trade. In terms of treasuries, it is the mark higher that some are now concerned about, that there should be a focus potentially for some market participants on the bond market, more so than on equities because of the signaling function here. And the reality is we marched up more than 50 basis points on the 10-year over the course of a week at the safest of safe trades. And you can see this morning we're travelling just shy of 4.5% on the 10-year, and the 30-year sits at 4.85%. Just how close it's getting to the 5% handle is a concern for a lot of investors. What we're seeing elsewhere, the dollar fade, and that has come really across a number of pairs and crosses. As a result, euro dollar, we're 113.55 morning session. We're giving back a little bit of territory, but we were 114 around a 3-year high. All, of course, as the ECB makes a decision this week without all the facts. We thought with Liberation Day, the ECB may have some time to digest those new items from the tariff policy. But in fact, now they still do not have clarity going into the meeting this week. Sterling is on the front foot, dollar sliding versus the Japanese yen. And we're seeing a little bit of firm trade for the dollar versus the Swissy, but that's about it at this hour. In terms of the Asian markets, the early trade today is firmer. So picking up on the green from Wall Street, news of some exemptions here. The Japanese stock market is much firmer, although Hong Kong stocks rallying 2.3%. So that is the strongest of the group, and decent gains for China and the Kospi. European futures. The markets Friday, well, we were down softly, about 0.1% on the Stoxx Europe 600 Friday session, with the DAX down about 9/10. So there was a real reversal for some quarters of the market going into that weekend trade.
Just very quickly, have you looked at any of your assets yet, or your pension or anything recently?
On an hourly basis, it makes for a little bit of reality TV.
I had a quick look at everything this weekend. I was very brave. Wish I hadn't. Moving on. Chinese President Xi Jinping called on Vietnam to help in keeping global supply chains going as he begins a 3-day trip to Southeast Asia. Writing in a Vietnamese state newspaper, Mr. Xi said there are no winners in trade wars and that protectionism has no way out. Chinese exports surged almost 12.5% in March as companies rushed out shipments ahead of the latest round of tariffs from the US. That's a beat of 8 percentage points on the 4.4% increase penciled in by economists. What do they know? This as trade data showed that China's trade surplus with the United States hit $27.6 billion. Well, Emily filed this report.
A strong showing for China exports in March, jumping 12.4% as Chinese factories rushed out shipments ahead of President Trump and his April 2nd Liberation Day. Imports contracted 4.3%, which was weaker than expected. For the quarter, exports rising 5.8% and imports shrinking 7%. The world's second largest economy is managing an intensifying trade war with the United States. President Trump ramped up duties on China to 145%, which prompted Beijing to retaliate on U.S. imports to 125%, adding that it will not respond to any further tariff hikes and maintaining that China will fight till the end. China's trade surplus with the United States coming in at $76.6 billion in the first quarter. China's Customs Bureau saying exports are facing a complex and severe external situation, but the sky will not fall. And China is actively building a diversified market and deepening cooperation with all parties in the supply chain. Now, this comes as President Xi Jinping heads out on a 3-country ASEAN tour this week, which will take him to Vietnam today, Malaysia, and Cambodia later this week. Xi is calling for deeper cooperation in manufacturing and supply chains with its regional neighbors. I'm Emily Tan in Hong Kong.
Yes, she is. And you can find out more on the China tariff story. Well, as much as we know anyway, as much as anyone knows, I guess, that is a great piece, I can assure you, on CNBC's website.
Coming up on the show, Wall Street dials up concerns of a recession, with JP Morgan CEO Jamie Dimon placing the odds of a downturn at a 50-50 coin flip. I'll bring you the details next. Plus, China officials urge US President Donald Trump to completely cancel his reciprocal tariffs amid an escalating trade war. And we'll hear from the group CEO of chocolate giant Lindt & Sprigli, who talked tariffs, demand and cocoa prices with Carolyn in an exclusive interview. Fascinating earnings out of the banks on Friday, and JP Morgan for me was really interesting, setting aside 75% more provisions to cover future loan losses. That was what we were thinking going into the numbers. How much would banks have to set aside? Well, investors got their first look under the hood of America's big banks as those first quarter earnings rolled on through Wall Street on Friday. JP Morgan, Morgan Stanley, Wells Fargo all reporting. Leslie Picker filed this report.
Questions about the repercussions from tariffs and the recent market fallout dominated the conference calls on Friday. Broadly, the executives said consumers and credit trends are holding up fine for now. Commercial clients have paused big transactions and investment, and no one was really willing to make any predictions about the yield curve and what it will mean for loan-making profitability. Chairman and CEO Jamie Dimon saying many of the issues will be resolved for better or for worse in the next 4 months, but Dimon reiterating his belief that geopolitical risk is paramount.
The most important thing to me is the Western world stays together economically, when we get through all this, and militarily, to keep the world safe and free for democracy. That is the most important thing. I really almost don't care fundamentally about what the economy does in the next 2 quarters. That isn't that important. We'll get through that. We've had recessions before and all that. It's the ultimate outcome. What's the goal? How can we get there? And it's literally that.
Today, we'll get fresh commentary from Goldman Sachs, and then tomorrow, on Tuesday, Bank of America and Citigroup. For CNBC Business News, I'm Leslie Picker.
Well, Jamie Dimon also says he's bracing for further disturbances in the Treasury market as a result of Trump's trade policy. Speaking during the bank's earnings call, Dimon said there will be a kerfuffle. I found the definition of kerfuffle for you. A commotion or fuss, especially one caused by conflicting views. I.e. pretty much sums up the administration at the moment, doesn't it? There will be a kerfuffle of the Treasury markets because of all the rules and regulations, before adding it will ultimately end in the Fed having to step in. Okay. BlackRock chairman Larry Fink is warning the US economy is on the brink of a downturn, pointing the finger at uncertainty caused by Trump's tariff policy.
I think we're very close, if not in a recession now. All the uncertainty is really making everyone pause. And everyone's wait and seeing. And so I think you're going to see this across the board and just a slowdown until we have more certainty. And, we now have a 90-day pause on the reciprocal tariff. That means longer, more elevated, uncertainty.
Well, we've got a whole host of markets since the inauguration, just to keep you up to date on where we're at. OK, so let's just take a look. I think the equity markets, I think we're going to go with first, are we? Let's have a look. We got them? I can tell you the numbers, actually, because I got them earlier. The S&P down 10.6%. The Nasdaq down circa 15%. Now, these are dramatically off their lows. So we had a big fat rally last week. Nasdaq was up 5.7%. As Karen was pointing out, the Nasdaq was up 7.3%. S&P up 5.7%. Big moves. Now, the US 10-year yield, let's take a look at this because it's back to where we were. Let's be brutally honest about it. Yes, the yield picked up aggressively, and Karen was spot on with those concerns that we saw last week and the real wobble and some of the sharpest moves we've seen since 2001. But the net level actually is not dramatic compared to where we started. It's the speed of the move that everyone was very, very scared about last week as well. The dollar since the inauguration as well. Well, this is very interesting because if you're trying to contain inflation in the States and you're buying a lot of goods from the rest of the world, you do not want to see this. And the key number there is 8.87% lower since the inauguration. Quick look at the oil price. Again, I don't know one American producer who's excited about drill baby drill at $61 for WTI. Maybe I'm wrong. I would be delighted if any of you out there know any US oil man or woman who is excited about drill baby drill at $61 per barrel. Maybe John Plassard knows one, senior investment specialist at Mirabeau Group as well. John, thank you very much indeed for joining us from Geneva this morning as well. Lovely to see you. The markets don't know where to look. They don't know what the next policy is. They don't know what the next policy reversal is. What on earth should we do?
That's a 1 billion question, and I think the answer is the same that. I don't know if it's the right answer, but that is what we're telling the clients since the beginning of the year. And I think we spoke about it in January together. It's where in a world where you have tariffs that are moving faster than earnings, there are only one solution, is what I call the 3D. So diversification, diversification, and diversification. And this is not just across asset classes, but also across geographies, risk factors, ideologies. You know that portfolios, and you just said that before, portfolios built on yesterday's logic will crumble under tomorrow's pressure. So, I mean, if you're not diversified in such an amazing volatile world, I mean, your performance will be hit very hard.
The problem is, and you know this, John, in a maelstrom, in a market storm, in a capitulation, and I don't think it's too dramatic to use those words at the moment. I'm always very careful about using words such as capitulation and crash in these type of environments as well. Diversification won't save you in the short term because people just sell everything they can. Where is the diversification at the moment that is going to save you? And I worry about the volatility of gold if you're going to say that one.
So I was going to tell you also about gold, of course, because this is one of our diversification assets. Private assets are also something we're looking at, hedge fund as well. So our portfolio is well more diversified than last year. And I fully agree that you also have you need also some liquidity, and I think Mr. Warren Buffett did that was a perfect example what to do in such an environment, because I think he made some money last month. And that was, everybody was complaining about the fact that he was not buying anything. But the fact that if you stay liquidity, it's something that you have to look at, and it is also a diversification move.
John, you've done extensive work on how countries and companies are affected by the tariffs, splitting it out right down to the likes of Nike, Adidas, Under Armour, Gap, Lululemon for the Vietnam exposure. The latest news flow of the weekend is that, look, President Xi Jinping is trying to maximize this geopolitical event and deepen ties with some of these Southeast Asian nations that may feel somewhat scorned by the Trump administration. Is there a long-term implication when it comes to company exposures across the region?
Yes, I think we have some lessons from this weekend. Firstly, that the consumer electronic industry still heavily relies on the Asian nation for manufacturing. You know, we forgot that because Mr. Trump was talking maybe too loud. The second lesson is that the Trump administration choose not to risk upsetting consumers ahead of the midterm. So there is a political sensitivity here, and you know that many of these products you're talking about are consumer essential, like sneakers, smartphone and computers. Those are items American couldn't live without. So if I should summarize what is happening now in terms of all those consumer essential for the American, it is a certain way a limit of protectionism. When it directly threatens voters in the US, it becomes untenable for the Trump administration.
So, John, what do you do with some of the sectors this week? We could see that the NASDAQ certainly trying to be recovering some territory, but in particular, so too have semiconductors. Is that a premature strike by some investors to get back in, given that we're now looking at the potential for targeted tariffs for this sector?
Yeah, so in our model, we have a forecast that the sale of semiconductor will be lower in the coming months. But, you know, everything is about anticipation. So, in fact, I think the bottom of the semiconductor industry is not so far away, of course, with lots of volatility. Artificial intelligence is not dead. We call it artificial intelligence 2.0 after DeepSeek. I mean, it is becoming not only a US play, but also an international play as well as the Chinese play. So I think we're not so far away from the bottom on the semiconductor industry. We anticipate, and the market will anticipate, that things will go better at the end of this year. And you know how it works in this world. 6 months before you have to catch up, even if the sky is gray, you have to pick up some of those stocks and, of course, the leaders.
John, I want to tackle the dollar diversifiers with you, because there's been a real narrative that Trump has done damage to US assets. And as a result, has he undermined the dollar? Has he undermined treasuries? And the reality is, I was talking to a fund manager in Europe the other day who was deploying in assets in bond markets in Europe when typically he would have deployed in US treasuries in times of uncertainty. What damage do you think has been done to the US as the reserve currency?
I think it's very bad news because you know that there are questions actually since 2 weeks that the U.S. Question about the U.S. role as a financial safe haven. That was never been the case before, even in 2018, maybe in 2008, and that is growing uncertainty threatens the $690 billion in bilateral trades that are done in dollar for the most of it. So a bigger diversification, but I'm sure that Mr. Trump understands what he's doing here. Maybe things are going too fast for him, but he understands what he's doing. Even if he wanted to have a lower dollar to boost the export, at some point he understands that the confidence is one of the things that is the most important in those markets. And if there is no confidence, people will start to look after other currencies, such as the euro, for example. But let's recall that the usage of dollar in the world is more than 55%. So, I mean, the US dollar is still ahead of all the other currencies.
Thank you for listening to Squawk Box Europe Express.
For more market-moving news, you can head to CNBC.com.
Or join us again on the show with Steve Sedgwick, Karen Cho, and myself, Arabile Kumete, weekdays on CNBC.